let me show you a past example of a central bank completely devastating people. Whether they meant to or not, who knows? 1.2 was a peg level for the Swiss National Bank against the euro. They said, we do not want this to go any lower. And so what did they do? They supported their currency here, right? They didn't want the Swiss franc to strengthen anymore against the euro. Well, they took it back, and the following just at pure chaos, this destroyed not just retail traders. This destroyed entire brokerages. This destroyed entire, everything was devastated by this. So my point was showing you this is that just because a central bank says, hey, yeah, we want to support this current price, does simply not mean that they have to, and is a certainty. They said the market feels like it's gone in reverse. We had a period of time where it seemed like inflation was getting beat, right? It seemed like inflation was coming down and the dollar was coming down with it, right? And now it seems like the dollar does not want to quit. However, we just had some numbers come out of the, come out of the US. It is the ADP non-farm employment change. And look at this, guys. We actually had some cool jobs numbers for once in our entire lives. I'm just kidding. Of course, we've had cooler numbers in the past, but the point is, oh my goodness, we've just had a slew of strong economic data overall, which has been pushing the dollar higher. And here we go. We've got actually something to the contrary for once. 89,000 jobs. The ADP non-farm employment change is the estimated change in the number of employed people during the previous month, excluding, of course, the farming industry. Now, this is what I like to consider a look ahead to NFP, which is the big one that comes out on Friday. Markets will certainly be moving due to this number as it tries to position itself ahead of the NFP jobs reports. But it's really interesting to see actually some cooler numbers out of the US. Now, again, this is not necessarily NFP, and it's not, we still have some time to kill before we get to NFP. The dollar, of course, pulling back on this number, seeing a little bit of weakness in that regard due to the fact that, if jobs are cooling down, that might be some data in the direction of, jobs cooling, labor market loosening a little bit. That might give the Fed room to be a little less hawkish. Now, if you are newer to the fundamental side and the trading side here, the idea of a hawkish Fed is raising rates to slow down the economy so that inflation gets squashed with it, right? Inflation is a real problem here in the US. If you're if you're anybody, you realize that inflation is real. Most times people have no idea what inflation is. They don't care about it. The price creeps higher every year across, for the most part, every year, except for years like 2008. Prices we see on average go higher, but people really start caring when prices rapidly go higher. And there are several reasons for that. There are several contributing forces, but one of the main ones is really strong economies actually increase inflation. So the Fed's job sometimes is to be the no fun guy who pulls the punch bowl from the party, if you will, to slow down the drinking, or in this case, the inflation. Anyways, let's talk a little bit about markets' reaction to this morning. We've got the NASDAQ making a push higher, and this is actually maybe promising for some of the indices bulls. We spoke to one of them yesterday. We had Ivan on the show. He is bullish on the S&P 500. I am actually pretty positioned, if I'm being completely fair. I have some options trades going on that are bullish indices for the coming months.
Did you know our market scanning software, the EDGEFINDER, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EDGEFINDER not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EDGEFINDER at a discounted price when they use promo code A1YT. You can check out the EDGEFINDER with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
So I wouldn't mind if the stock market went up. However, do I think that that's an easy course of action going forward? No, I don't think so. I wish it was. Trust me. Trust me when I say my stock portfolio would really like if the markets rallied. Do I think it is what is likely to happen in the short term? No, but can I be wrong? Absolutely, and I hope I am. That's what I'm saying. Factors are pretty bearish right now. You have yields screaming higher right now, and yields, by the way, guys, dollar bulls, the reason for all the dollar bullishness is right in front of you. It's the yields. The bond world has been crashing, and yields going up with that. Of course, yields trade inversely to bonds. Now, in terms of the dollar index, I want to come back to this and talk technicals here for a second. So we've got a breakout to the upside, and now price pulling back into this area. Many traders are wondering, is this an opportunity to be long the dollar? And in my personal opinion, as much as I wish it wasn't, it does look kind of like a bullish area. So I am one of those, I'm trying to be rational with the markets. I would love for this dollar to start selling off and continue to go lower. That's my bias. I want a weaker dollar. A weaker dollar likely leads to my indices trades, my options trades doing well. But on the currency side and the gold side, etc., things that are very much respondent to the dollar, I'm going to be honest, the dollar still looks strong. And as we pull back to this 38.2% ratio here today off of swing low to swing high, we get our 3 fib levels listed here. I'm going to be honest, this looks like an opportunity to be more bullish USD. Now, we have to talk about the elephant in the room, the dollar yen. This chart just got broken yesterday. Everybody who was watching it knows that already. The dollar yen, if you watched my video yesterday, we discussed the Bank of Japan basically saying they're going to step in and intervene. I kind of, to be completely honest with you, I question mark. I put a big question mark on the Bank of Japan, because are they able to really stop this dollar yen from creeping higher and breaking through the highs? Again, clearly they have the ability to spook the market, but the reality is that the dollar pressures are very real. And if yields continue to rise, it's possible we completely break out on dollar yen to the upside. Anyways, my idea that I pointed out in my video yesterday about the yen's debacle basically is I'm looking for this high point to potentially break out. Okay, dollar yen previously traded at 150. This has been clearly stated by the Bank of Japan that they do not like this area. They don't like the exchange rate being that high. But if you're watching the Bank of Japan and they what is their card that they're going to play, right? Their trap card, if you will. Their trap card is going to be we're going to buy our own bonds to support our currency. That is basically what they have kind of threatened to do. Now, you might say, well, that just means it has to go down, Nick, right? Quick history lesson, guys. Quick history lesson. Do not let a central bank completely fool you, okay? If we go back in time to a little something called 2015, let me show you a past example of a central bank completely devastating people. Whether they meant to or not, who knows? 1.2 was a peg level for the Swiss National Bank against the euro. They said, we do not want this to go any lower. And so what did they do? They supported their currency here, right? They didn't want the Swiss franc to strengthen anymore against the euro. Well, they took it back, and the following pure chaos. This destroyed not just retail traders. This destroyed entire brokerages. This destroyed entire, everything was devastated by this. So my point was showing you this is that just because a central bank says, hey, yeah, we want to support this current price, does simply not mean that they have to, and is a certainty. So many traders are going to make the dumb mistake. Not actually dumb. It's kind of a logical idea. The logical idea is like, okay, well, 150, they want to support that level. I feel like I got the wind in my sails. I'm just going to sell the dollar yen every time it comes up to 150, right? Just be careful. They can take it back. They can, and the resulting, if everybody's shorting the dollar yen thinking guaranteed going to come down, be very careful with that. In fact, let me show you guys a catastrophic warning signal that we spotted yesterday on our retail positioning. Look at this, guys. Guess what retail traders are doing right now? We're setting the stage for what I think could be devastating to retail traders. Retail traders look at Bank of Japan saying that and they say, oh, they're going to support the 150 level. We got to be short dollar yen. Just be careful. I'm saying this. I'm going to say this over and over. I hope you're hearing me. Central banks, just because they say they'd like to buy bonds to support their currency, does not guarantee that they can just outright defeat the strength of the US dollar continuing higher. So do not get caught with your pants down. That is what that looks like. Okay. So that is, I don't know how to any more PG way to say that. All right. That's not even PG. That's like PG 18. But the point is, right, just be so careful, because again, people are going to get crushed by that potentially, if that were to come to life. Yeah, just I'm telling you now, we should probably clip this just in case, because again, these are central banks can play games. They can play fake moves, right? They can try to talk something out of existence, right? It's like Bankman-Fried, the SBF guy, the FTX guy. He was, the week before, he was like, his whole thing imploded. He was like, we're fine, everything is good, right? People lie, so be careful. Okay, so a lot of stuff to cover here today, guys. We had a number come out of the US. I mentioned this briefly earlier. Some cooler jobs numbers might offer a little bit of relief in the short term to dollar bears. And let's take a look at this. So here is your 1 hour chart view. I mentioned this on the dollar. The dollar's still relatively strong overall. Economic figures look good. For the most part, I still think dollar strength is in. But let's go take a look at gold. Gold, I mean, this is just showing the weakness of gold. We had some weak dollar news, and yet gold barely moves off the lows. People are not interested in gold right now. I mean, we are, hey, to be fair to gold, we haven't broken this level of support, but we also haven't really strongly seen the bounce. I mean, you would expect with some cooler jobs numbers here this morning that we could at least get a push off of the lows, maybe up into the 1830s, 1835, something like that. Not quite. So yeah, oil. Yeah, I got stopped out on oil. This one, no bueno for me. I tried to take a long on oil and did not work out. It happens to all of us at some point or another, but I had like a 1-to-1 trade going and then just completely fell apart, unfortunately. So I am out of the way on that one for now. And we'll look, honestly, I don't really see any trade now for oil. If anything, this level breaking out solidified, like, yeah, this actually might be the end of this uptrend. So I caught this move here, right? So I caught some great moves on oil, but I also got stopped out on the second attempt. So it happens. So I'm out of oil, no trade on oil for me, and not interested in buying again. This one, again, sometimes you just got to take your L's on the chin and just say, you know what? Trade is not there anymore, and that's okay. Yeah. So anyways, let's keep going. S&P making a little bit of a push off the lows, but still, again, a long way to go. I am bullish on the Russell for the longer term. If we do start to see that dollar weakness, the Russell likely would do well in an environment in which interest rates potentially come down. That would be great for the Russell trade ideas, but not really quite ready for that just yet. Anyways, Euro USD, we'll take a look at the Euro together. Let's check NASDAQ. We'll take a look at NASDAQ in just a moment. You all always know I'm happy to talk NASDAQ, especially when it's actually looking bullish. But for me, it's still not. We'll talk about that in a second. Euro pulling back to resistance, past support. Is it going to hold as resistance? It doesn't look too promising at the current levels. However, it does seem to have come back to retest the 50%. Let's do this really quick. I'm just going to tighten up my zones here a little bit. So we've got this 50% retracement that's kind of come in. Will the euro continue lower? Obviously, it's very much dependent on dollar strength. I would say path of least resistance is down for Euro USD, in my personal opinion. I'm not probably going to take that trade at this time just because I see some other things. And also, I would really be interested in that 50%, that dollar strength. But I'm also being cautious because, again, we're 2 days away from, we have unemployment claims tomorrow. We have a lot of jobs numbers coming out for the rest of the week. And I think that will give us a little bit of a picture on the dollar situation. If we get hot jobs numbers, I'm just going to stay bullish on dollar. But if it does not, if it starts showing some cooling signs, maybe it's time to start looking at the dollar a little bit differently. But again, we don't know those numbers yet. We have one piece of data. We had cooler ADP non-farm employment change this morning. That's pretty bearish for the dollar in the short term. But again, this is one piece of data. Don't let that one piece of data completely change your opinion of the dollar, right? We're still in an uptrend. Bulls are still in control. I mean, honestly, this dollar bullishness, this level actually looks pretty decently attractive in my personal view. I probably will stick away from dollar yen just because of all the Bank of Japan stuff. But Euro USD, I actually don't hate it, to be honest. And I think the EDGEFINDER does have it as a sell. Let's take a look. Let's see. The euro is very bearish. So we're still getting a very bearish reading out of the EDGEFINDER. So I do like that. I apologize. These streams can be pretty taxing on my voice, so I have to drink water. Nick, do you usually hedge? No, I don't usually hedge. Depends what you define as hedge. I trade some options for premium, and in many ways, it's not purely momentum trading. So if you want to talk about hedging in the sense of strategy diversification, I do a little bit of that. UJ is so manipulated now. I think, you know, I would say less or so manipulated and just many forces at play. Many forces, because you have a dollar strengthening situation, and then you have NFP on the horizon, and you have the Bank of Japan saying, hey, we're going to buy our own bonds to try and support price of the yen, right? They don't like that the yen has gotten so beat up. So manipulated, I mean, it's two major central banks, and they both have influence. So pure manipulation, I would think, would involve just one central power, whereas in currency pairs, there's oftentimes there's two. In fact, there's oftentimes many involved in, you know, like for example, the euro dollar. There's many countries involved in this exchange.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.